Hello everyone. Let's start with analyzing what happened to Nifty. Nifty, like we predicted, it gave a terrific down move since opening. There was continuous fall. This is a 15 minutes candle, and you can see that with every passing 15 minutes, the market continued to fall down continuously without taking any break. And this is the kind of things that we have predicted in the Friday's video as well. I have posted that the market is ready to make some sort of 2000 points move, and most likely on the downside. That's exactly what I have said on the video that I posted on Friday. And Nifty exactly did that. It continued to fall more than 250 points. Fall was there, and then there was a consolidation, and it took a support at this level which we have drawn. This is the same level which we have seen been tested in the past as well, and it managed to clear for several weeks and days it took to reach the peak, and from there it started to fall in one single day. So we clearly see that the bears have taken the day totally into their control. And the reason why we were so bearish, and I was expecting this sort of fall, was the reason like VIX kept on falling continuously, which is not a good thing. And then it reached as low as 13.4, 13.5, and there was very less premium appreciation. Nothing was there happening in the market over last few days, and this sort of down is what will help the market to sustain in the long term. These sort of small corrections are needed time and again in order to make some good rallies on the upside. So if these gaps are not filled, like there were a lot of gaps that happened, if these gaps were not filled, then that there could be a very big fall coming in future. And glad that it cleared it now, which helps us to enjoy as a buyer. As a buyer, you can be more comfortable because the premiums will be like little inflated, and you can see some sort of price movements happening. And then if you're on the right side of the trade, then you can make good money, right? In the past few days, it was extremely difficult. Whether you are a PE buyer or a CE buyer, both the sides were losing money, right? These sort of falls will help you to get over that phase of the market and then step into high volatile market with a lot of premium movements. And such fall is much more needed. And the good thing is that it has fallen and taken a support at this level. If this level is broken, that is 17,782 is broken, then we have a massive fall waiting. We can expect another 500 points of fall happening. So what will happen on Friday will be extremely critical to determine the days and weeks to come, right? If it breaks this level of 17,780 or 17,780, then you can expect the market to fall till 17,400 levels. So this is one of the insights that you should keep in mind. And supposedly, if the market is rallying up again it is going to become very dull market. Probably they will do some sort of rally till the budgets, and once the budget results are out, and then the market will make some event based moves, after which there will be some correction, because without correction the market cannot go on higher and higher. And I am of the view that it should touch 17,400 levels in coming weeks. That is on cards for sure. So let's explore the FASP levels for tomorrow. The T7 on the higher side is at 18,322 and downside 17,498. So that's a wide range of coverage. And if you are a writer, it's extremely important because the market has given 1,000 points fall. It's very scary to write any positions, right? And that's the reason I'm suggesting you to take completely edged positions. Like you can go ahead and then write T6 and T6 on both the sides, and strictly keep T5 or T7 as stop loss. That's one trade setup that you can try. Just ignore the first 1 hour for tomorrow, because it's a Friday and then it has given us such a massive fall. You should wait and see what the market is trying to do. Is it trying to consolidate around this zone, or is it trying to break down and then go down further, or is it trying to pull up? All three scenarios are wide open. So that's important for us to understand and then give that first 1 hour of trade, so that we can ride along that and then make most of it. So here, my suggestion is that do not take any contra position, whichever side the market is now breaking out, and then you should keep taking the positions in that particular direction. Let's say after 1 hour the market is trading at T2, then you should take a buy position and then keep one level down as stop loss T1, and then keep T3 as target. If this is achieved, then trial it and then keep T4 as target. Likewise, you need to increase and then keep trailing it throughout the day. That's how you can maximize your profits. So that's one thing about that's a trade setup for Nifty. Now let's explore Bank Nifty. Bank Nifty had a very terrific fall. You can see that there was a constant down movement on Tuesday, and then there was some recovery. But what happened on Wednesday was absolutely brilliant. It kept on making some sort of 200 points to 250 points candles, and then kept going down and down. It even broke the mini support zone and directly entered into this, and I was like literally wondering if there is a recession sort of move going to come, because this is a huge area, and it broke and it's trying to go down, right? And then thankfully it got recovered, and then the close was somewhere within this range. Now what's going to happen? Is it going to recover from this range and then try to go higher for budget related news, or it's going to break down and then go further down? That's something we have to wait and watch. And absolutely, the first 1 hour of trade we should not trade at all, because it's in a high breakout zone, high zone where the breakouts can be fierce, and then either there will be a sharp recovery or there will be a sharp fall. There is no second thoughts about it. Once that first hour of trade decides where it wants to go, subsequently you can make decisions. For example, after the first hour, if it breaks and then trades around T2, T3, then you can go on, taking PE positions and keep one level above as stop loss, and then keep trailing it as it, goes down the level. Similarly, if it is recovering and then crosses T3, then you should enter and then keep one level down as stop loss, and then keep trailing the one levels higher, right? So what I would suggest is that, as an option buyer, wait for the breakout. Do not take any positions in between. Wait for T3 on the higher side to take a CE position. On the downside, wait for T2 to be cleared so that you can take a PE position. And that's how you should do. As an option writer, please be extra careful. Tomorrow, I don't advise any sort of writings. Just ignore all the writings, because it's going to be a high volatile day. If there is going to be a breakout, and on the downside, I am expecting somewhere around 1,500 points fall, which is about, you can expect market to reach 40K if this level is broken. So that's why I sincerely request you all to take that first 1 hour you should give yourself, and then go into the buying position. Do not get into option writing, right? So that's a straight setup for tomorrow, and all the very best. Looking forward to see you all in live stream. Have fun and take care.